Good. So efforts to counter the economic impact of the COVID-19 pandemic are accentuating trends in the financial systems, and prospects for a return to less expansionary monetary policies have become even more remote. At the same time, the imperative of social distancing is accelerating technological advances, including in the area of digital assets and blockchain technology. Each of these individually, as well as their combination, may strengthen the uptake of new technologies and accelerate the structural changes in the financial industry. With this and the insights of the preceding speeches in mind, we would like to conclude the micro-perspective part with Christine Moy, Alan Lane, Diogo, Mónica, and Michael Bucella, who will discuss how these developments and trends are changing the way institutions and individuals are interacting with capital markets and what the consequences could be. So, dear Michael, the stage is yours.
Thank you, Nicolo. It's a pleasure to be with CfC again and be able to have a nice conversation with a few of the leaders in the what we call the revolution and evolution of capital markets. So, I think what I'll do first, and we can start with Christine, is just allow each of the panelists to introduce themselves, their organizations, and kind of what they do at their respective place of evolution.
Great. Thanks for having me. So I run the program, which is a blockchain-based network of cross-border payments banks connected together in a peer-to-peer way to exchange information to solve cross-border payments problems like account validation, sanctions resolution, and ID verification. I also lead the blockchain program at JP Morgan. Link and the blockchain program are actually part of this new division created at JP Morgan called Onyx, focused on delivering solutions that use blockchain and crypto technology.
Let's go to Diogo.
Hello, everyone. My name is Diogo Mónica. I'm the co-founder and president of Anchorage Digital. Anchorage is a federally chartered crypto bank in the United States, and we essentially offer the platform and the services that institutions need to build products in crypto. And when I mean services, I mean custody, I mean trading, lending, borrowing, and deep crypto native elements such as staking, governance, and blockchain interaction overall.
All right, Alan, you're our anchor.
All right, thanks, Mike. It's great to be here. Thank you for the opportunity. My name's Alan Lane. I'm the CEO at Silvergate. Silvergate is a California state-chartered, federally insured and regulated bank, and we are essentially the on-ramp and the off-ramp from the U.S. dollar into and out of the digital currency industry. We've been doing this very intentionally since 2014. And we have over 1,100 institutional customers whom we connect with each other across our flagship product, which is known as the Silvergate Exchange Network. It is a 24/7 API-enabled platform that connects our customers all around the world. And it's great to be here. Thanks.
Excellent. All right, great. So I think what would be great to start off with is talk a bit about the evolution of crypto within your respective organizations. We have Christine from JP Morgan, where it went from bastardized to beloved and may still at some level be bastardized slightly, to Silvergate, who was an early adopter. Let's start with Christine. How have things evolved from the earlier days of kind of the comments from JP Morgan that we all reference in crypto past to where we are today?
Everyone's been familiar with some of Jamie's comments, around Bitcoin, and that has really stuck to them. But from like an crypto industry perspective, JP Morgan's actually been doing a lot in the background and trying to support the crypto economy, behind the scenes. And what I mean by that is, for example, like 3 years ago, we made a deliberate choice to onboard crypto exchanges, regulated crypto exchanges, as clients for basically payments and operating accounts and FX. And for our part, that was back during crypto winter. Definitely wasn't a fast follower on this most recent bull market, as an example. We also have a significant investment banking and equity capital markets franchise. And so we had the opportunity to be the lead financial advisor for direct listing. Super proud to have the crypto economy public with that deal. But what less known is, for example, we led a deal related to creating a new North American Bitcoin miner, Cypher, which is actually a derivative of Bitfury, also through like a SPAC merger pipe raise. Additionally, I'm sure you've seen on crypto Twitter some of the work that our investment banking research team has been writing. Not only covering Bitcoin inflows and outflows, but also delving into crypto infrastructure. I think one of the most recent articles that was written was around the Ethereum market infrastructure and why Ethereum price is holding up, better than Bitcoin. But also has delved into Facebook's DM, central bank currencies, and even most recently, some of the effort in El Salvador. And so, between that plus clearing CME futures since the contract started, and our crypto fund on the platform, and along with our blockchain program being advocates for the crypto ecosystem and building blockchain technology specifically with an Ethereum variant. I'd say we kind of get a bad rap, like in terms of being kind of like the crypto bastards, but basically trying to do our part on that.
It's always good to debunk some of the media headlines and bring reality versus media narrative. So I'm glad everybody gets some transparency with what's really happening in JP Morgan. It sounds like there's a lot. I'm sure you have no shortage of people asking you about crypto on a daily basis. And Alan, I guess we can go to you next and talk about how Silvergate was an early adopter of this market back in 2014, as you mentioned, and kind of the evolution. You guys obviously being one of the key infrastructure components in the St network, and how things are progressing and where you kind of see the forward opportunity.
Yeah, absolutely. So when we first got into this space back in 2014, it was very much a deposit initiative. We were essentially looking for deposits to fund the more traditional assets that the bank held. And so early on, we were just a place where a Bitcoin company, and this, again, in 2014, it was primarily Bitcoin. Ethereum was just on the horizon. But we were essentially a bank that was open for business for Bitcoin-related companies. As I mentioned earlier, we are institutionally focused. We don't have consumer clients directly. But as we've developed our platform, our account offerings, through the process of establishing a regulated, on-ramp and off-ramp, we recognized that the traditional banking system, as everybody knows, is only open during normal business hours, Monday through Friday, but yet the cryptocurrency markets trade around the clock around the world. And so we built this API-enabled platform that the industry calls the SEN, the Silvergate Exchange Network. And it really is a way for our customers to interact with each other and enter and exit the digital currency ecosystem 24 hours a day, 7 days a week from a regulated financial institution. But we didn't stop there. We've most recently, in January of 2020, we began offering a Bitcoin collateralized lending product that we refer to as St Leverage. And it is, again, institutionally focused, but it allows our institutional clients to borrow against their Bitcoin holdings, either for trading purposes, in a margin type of a relationship, or for any reason that an institution would desire to borrow against their Bitcoin holdings. We've essentially we're seeking to create a network of custodians so that no matter where an institution holds their Bitcoin, they can keep it right there, but pledge it to us, and we will lend them US dollars against that Bitcoin. And then finally, to wrap up, we also have a stablecoin infrastructure solution. We are the transactional bank for all of the US dollar-backed stablecoins that are regulated inside on the shores, if you will, of the United States, and that's USDC, the Pax dollar, Gemini dollar, and True USD. So we are the on-ramp and off-ramp for folks to get into and out of those US dollar tokens. And most recently, folks have probably seen that we announced that we will be the exclusive issuer of the DM US dollar-backed stablecoin. So we're just really excited about all the ways that we have an opportunity to help our customers.
That's a lot. You've got a lot going on there, Alan. I think And as someone on the investment management side of the house, we appreciate everything you're building, obviously. And I guess this has been a good discussion of the evolution of kind of analog to digital or traditional to crypto native. I think I want to pivot over to Diogo and talk about this. Anchorage is a digital first organization, a crypto native organization. At least that's how I perceive it. And I think there's this new class of organizations that are truly digitally native. And I think you're helping them kind of build through and evolve as large organizations. Where within the stack are you working most closely with this new class of organizations? And maybe just touch on that new class altogether would be very helpful.
Absolutely. I think, taking what Alan was saying, Anchorage actually has a partnership with Silvergate where clients can custody their collateral with the safety of Anchorage. And it is Anchorage because we're digitally native. We were started by 2 security engineers. That's where the company actually came from. Both of the founders at the core are experts and have a lot of experience in the core component of crypto assets, which is how do you safely generate, safekeep, and protect the private key ecosystem, which is ultimately what underlies the value of Bitcoin, Ethereum, and other cryptocurrencies. And we create systems, APIs, and the ability to have these institutions not only safely custody with us and safekeep their assets, but we have collateral monitoring systems, we have brokerage systems that do auto liquidation. And so in a way, if you are an institution, whether you are a traditional bank and a bulge bracket bank such as JPM, or if you are a smaller bank but that is all in on crypto such as Silvergate, you can actually use our infrastructure and you can use our services, and you're actually talking to a peer. We are federally regulated. We are a bank the same way that BNY Mellon is a bank. And so you're talking to a peer from a regulatory perspective, but you're accessing the technology that no one else can really build, which is core native technology that allows you not only do these basic components such as custodying, but really in the future integrating deeply with these assets. Staking, governance, DeFi, all of these are terms that you've probably heard and that institutions really want to participate in, primarily due to the fact that they're very high yielding opportunities, and you really need a digital native infrastructure and a company that is regulated as a bank to allow you on this, to help you on this path towards crypto products.
Great. So maybe back to Alan and then maybe to Diogo. So talk to me about next gen tech for existing legacy business lines or markets. What you're doing currently. What are you thinking about in the future? What excites you most? Maybe draw an analog between an existing kind of old business line and what a digital version of that looks like. Alan, we can start with you.
Yeah, that's I really like the way you frame that, because where we're spending a significant amount of time these days is on this stablecoin infrastructure front. And as you just asked the question, Mike, about kind of a legacy business, versus kind of a digital, there's been this transition going on where as the dollar moves onto a blockchain, if you will, onto this permissionless, kind of open source, blockchain, that has primarily been used for digital asset trading. Right. And so the 4 stable coins that we currently support from an infrastructure perspective are primarily used for trading. Now, I don't want to diminish the fact that Circle and Coinbase and the USDC token is absolutely, trying to break into commerce. And I think they're making some great strides there. But as we at Silvergate, as we think about this, the trading use case is absolutely kind of cemented. But what we're really trying to help enable is a digital US dollar for commerce, for remittance. And that's what excites us about working with DM. And to tie it into what you were asking about, kind of a legacy system, it really disrupts, essentially all of payments, right? Visa, MasterCard, the remittance services, such as MoneyGram or Western Union, et cetera. It really is transformational. And, we have the opportunity to lower costs while essentially bringing in the entire world in a low-cost, very accessible way to access finance that the majority of the world, unfortunately, just doesn't have access to.
That's very exciting. And Diogo, let's pop over to you. I mean, what excites you most about next-gen tech for legacy business lines? Kind of what do you see in the forward that excites you most?
Maybe let me start with what is different from traditional space and traditional world. So it turns out that when you start thinking about, say, custody or trading, people typically think about traditional exchanges, the New York Stock Exchange, and traditional types of venues like that allow you to trade. One major difference that you have to keep in mind is that crypto assets are their own different set of technology that require every single one of them a dedicated view and a dedicated implementation. And what I mean by that is if you on the New York Stock Exchange today have the Amazon ticker and tomorrow Square IPOs, then the same API, the same type of use case, the same type of integration now is available to you, and you can trade the same exact instruments that you had available before. The system doesn't really change. And with crypto, it is completely different. If you want to come into space today and you want, for example, to start offering custody services or want to start offering brokerage services, you have to start from the beginning. Anchorage started 4 years ago, adding support for Bitcoin and then Ethereum, and then all of these other assets that we now support hundreds of. Every single one of them is different, and the technology is unique, and the distributed systems and the guarantees and the staking elements and the consensus, all of them are unique and all of them are distinct. This heavily favors a technology-first company, which is why Anchorage needed to be founded by two security engineers and why Anchorage needed to have new technology that was not cold storage and storing things in safety deposit boxes to actually allow them to integrate with this new financial system. So I want to make sure that this base is understood because this is significantly different than the traditional world in which there's DTCC and there's an exchange and all that there is as a difference is the tickers. Everything else is incredibly regimented and there's very concrete APIs, so to speak, for how you interact with them. In terms of excitement, a lot of the time that I spend personally and a lot of the new interest that is coming into is twofold. Number one, market infrastructure that is traditional, that is actually being made more efficient by having certain legs of the ecosystem replaced by crypto. I think there's this myth that crypto is somehow going to replace traditional finance. I don't believe that to be the case at all. I think crypto is bringing competition to the traditional industry. And that's incredibly important because it's going to make better products for all of us. And so there are elements, and we do have partnerships with very large corporates such as Visa that are looking at their payments ecosystem and how they can make it more efficient. And for example, we have a partnership with them where we have digital native settlement, and that allows any kind of card issuer not to have a relationship with an issuing bank and a bank sponsor, and allows them to effectively settle directly in USDC or other stable coins with Visa at the end of the day, bypassing T+2 and making the actual leg more efficient. So that's one aspect, which is the aspect of current market infrastructure that gets made more efficient by crypto. The other aspect is DeFi, and this is not really well distributed across all the institutions. Of course, institutions are still coming in with the stable coins, typical stable coins, and with Bitcoin and Ethereum. But the reality is that a lot of the innovation that is happening on these smart contract platforms. And that is actually where I spend the very little free time that I have looking into. And a lot of the new interest that we're seeing is capturing the yield, participating, doing VC investments, actually building new tools and financial products on these ecosystems. That's something that we're seeing that is evolving in a pretty dramatic fashion. And then finally, I'll just reiterate what Alan is saying. Anchorage has actually been a founding member for the DM Association from day one. I think we probably were the first ones that were involved where there was only one person or two people thinking about this. And we do custody and RFASP on this network and are really excited to support large organizations that want to use DM and add these types of innovations. So that is very different from the traditional financial world where, the innovation that is happening in the financial traditional world maybe is Fed now. That is the thing that allows you to move money from A to B instantly. We've already had that for 13 years in crypto. And so the innovations that are happening are very distinct.
I think it's really interesting to, hear Diogo's perspective about the technology first company and having the security background. I mean, oftentimes, obviously, at JP Morgan, at a global bank, when people ask, why don't you do crypto custody? When's crypto custody going to happen? And I'm like, okay, tell me one thing. Do you think it's easier for a bank to turn into a security company or for a security company to turn into a bank? I mean, they're both hard in both directions. But to basically illustrate how different it is to manage, say, custody and service traditional securities that are being held at DTCC that were managing book entry versus managing error instruments where, like, one fat finger in the account, like, it's gone, like, it's irretrievable. And so, to know that. The other thing that, I think is really interesting, hearing what Alan's been up to Silvergate is the fact that this bridging of traditional finance and public infrastructure, public blockchain infrastructure. Now, we're kind of doing it in a different way at JP Morgan in that, we've been focused for years on building on an Ethereum variant. Now, this is because we believe in public blockchain, but we weren't ready as a globally regulated bank to make that leap. And so, essentially what we've been doing is building on our permissioned Ethereum, sort of our walled garden version, but, kind of taking the firm and basically the institution through the doors to get to public blockchain infrastructure. We can't go from like 0 to 100, 0 to crypto, but basically walking everybody through the doors to make that gradual evolution internally where people are like, okay, blockchain, that's scary. Okay, Ethereum, I got it. And then hopefully getting them to the public infrastructure at some point in time.
Yeah, actually, maybe we can continue with you, Christine. So I was surprised to hear about the breadth of activity at JP Morgan across, investment banking units that are crypto dedicated to new tradable products, to what you're doing with Link. Help us understand a little bit, maybe dive a bit deeper into what you're doing with Link. Give us an example, perhaps, if you have one, of something that's come out of that platform that that people would be surprised to hear about.
Yeah, I mean, we've got a few things going on. I think the first thing that we're really proud of is having created a new tradable instrument, and specifically those that are in the trading space, about repo trades. And then in the traditional markets, repo trades are, in the spans of, in the millions, but are usually overnight maturity or term maturity, so measured in days. And what we've been able to do with our Ethereum variant blockchain technology, I guess the bastardized technology that we've been building, we've been able to add a subledger on top of our DDA system, which is JP Morgan Coin, and a subledger on Bank of New York Mellon's tri-party collateral system, and enable instantaneously settled repo trades that mature in hours, if not minutes, like as opposed to days, right? And that was something that was not possible before, and we're transacting billions of dollars of JP Morgan Coin a day as a result of that. And I think what's interesting is that the journey of how we got there, we originally started 3 years ago with trying to figure out, like, how do we tokenize a bond, or how do we tokenize equity? And we actually did like 150 million blockchain-based bond, with a number of partners and asset managers like Bucella, asset management, asset amongst others back then. But there wasn't really like a business case to say replace like traditional bonds with a blockchain-based infrastructure, like to basically replace infrastructure that had been built over the past couple of decades with something that we started building like 6 months ago, as an example. But what we did find was that there was this opportunity to create new infrastructure in green space, to create unique products that could not be enabled before with legacy infrastructure. So the cool thing about this intraday repo product that we've created that's on Onyx Digital Assets platform is that essentially like the collateral nor the cash moves. It's like a token balance update on the blockchain. So that's one example. As it relates to the Link network, what we're doing there is we're taking traditional cross-border payments pain points, like needing to validate that this account is actually owned by you in order to make payment, to prevent fraudulent payments, or to prevent overturned or investigated payments, or resolving sanctions exceptions. These really like sort of boring, banal like areas of cross-border payments that cause like pain points, and taking like a new spin and a new look at them and a new commercial model. And what I mean by that is, for example, with Confirm, which is the account validation application that we have on Link, rather than like a give to get model where all the banks contribute all their data together into some honeypot of data that's probably like vulnerable to hacks, and we probably have to pay to get the data back out of it, we've created a system where banks can actually exchange that information bilaterally or multilaterally, and then get paid for that information. So if you've seen any of like the presentations from Blockchain about like kind of how blockchain will create this new commercial exchange for data ecosystem, that's something that we're experimenting for today with live with Confirm with Link as an example.
Awesome. Well, that, again, very surprised to hear all of it happening within JP Morgan. Happy to hear it. I think a good next question or good bridge from that is, so basically each of you are kind of evolving the industry across critical infrastructure players, critical players in the industry. Between what's happening at JP Morgan, you've got the Send network at Silvergate, you have this world-class custody hub of innovation at Anchorage. What drives the adoption of these tech stacks? So is it more product push, client pull? Is it a collaborative effort between key industry players and your respective organizations? What would you say drives the bulk of the growth that we've seen thus far? We can start with Diogo and then move to Alan and Christine.
I would say that it's changed dramatically over the past 4 years. In the beginning, the primary evolution was being driven by crypto investors and VC investors wanting to get into the space, make some bets on some of these new blockchains. And then we had a phase of that. And then we had this phase of institutionalization where a lot of the players were coming to the market to offer these types of products. And the base platform that was needed, you had the custody platforms, you had the trading platforms, people trying to provide liquidity, all of these market makers coming into the space, aggregating liquidity, all these other elements. You had the obviously race to qualified custody, and you had the race to regulatory clarity. So all of those things were things that happened. More recently, in 2020, in 2021, what Anchorage is seeing that is actually driving crypto forward is no longer just this speculative or investment thesis. And there's a lot of fintechs coming to us that want to build real products based on crypto. They want to generate yield for their clients. They want to do Bitcoin rewards for their credit card programs because points really don't cut it for consumers anymore. And in general, there's the sense of they want to attract millennials onto their platform. They want that relationship. They're afraid of the wealth transfer that is going to happen from the baby boomers to the millennials. They don't want to lose that relationship, and they understand that millennials have affinity to crypto and have this distrust from traditional players and from effectively just centralized organizations in general. So there's a huge rush towards trying to build those relationships, and those relationships are being built in crypto. So products being built in crypto is definitely one of the things driving forward. And then on the other side, I think we can talk about the bulge bracket banks coming into the space in a very meaningful way, because the space is here to stay. We see very large institutions, the endowments, the pension funds that are coming to us. They want to take positions off of their balance sheet, or they just don't want their dollars to sit on their bank account generating 0% yield and want to deploy into crypto style opportunities. So it's been really been a driving force from fintechs, market players building products, and bulge bracket banks coming into the space, and no longer just financial investment and speculation. That has been what we've seen over the past few years.
Great. And I'll give us a good old-fashioned 2-minute warning before I think Nicola comes in for Q&A. So we'll pop to Alan quick, and then if Christine, we'll give you the last call.
Yeah, so I'll keep it quick. So at Silvergate, we are 100%. This is a pull as opposed to a push type of effort. And what I mean by that is we're very customer focused, and we are responding to customer needs. And we have the benefit, because we started looking at this in 2013. We are now in, Silvergate has now participated in 3 crypto bull markets and 2 crypto bear markets. And so that gives us the confidence, as Diogo just said, this is here to stay. It's not going away. And so when our customers come to us with a need, such as when our institutional investor clients were seeking leverage, that gave us the confidence to build Send Leverage, to start working on that when we were in a crypto bear market, right? And to put the infrastructure in place. Diogo mentioned earlier, they were one of our first pilot launch partners back in May of 2020 on Send Leverage, and now with the stablecoin effort as well. So this is 100% responding to customer need. How can we be helpful to help them solve their challenges so that they can grow their businesses? And it's just an incredibly exciting time.
Love that. All right, Christine, wrap us up.
Yeah, I mean, if I might just add, the key things as the blockchain program at JP Morgan that I've been doing is working with their leadership across the firm to tell them about technology, to tell them about how it might impact their businesses. I've been doing it for 5 years. I can definitely say that the nature of the conversations in the past 5 years has been significantly changed in the past 6 to 9 months, right? I mean, and talking to Alan about the different cycles we've seen, I mean, the most recent cycle that we came out of was the crypto winter. plus the enterprise blockchain froth of disillusionment. And at a certain point in time, people were like, okay, so this blockchain crypto thing is over, right? Do you need a new job? And I was like, no. Like, we're still working, like we're still working this, like it's still going to happen. And for a moment, like, you know, we had to like, you know, kind of ask ourselves, like, are we doing the right thing? Like, do we have the right conviction in the right place? Glad that we totally powered through. Because obviously like a groundswell from both like the blockchain and the crypto perspectives in the past 6 months. And now we're like, okay, yeah, well, we were told you this whole time that this is going to be a thing. And now the conversations that we're having with the most senior leadership of the bank are very serious, are very action oriented and engaged. This is no longer a curiosity. It might have been 5 years ago, or definitely was 5 years ago. And like three years ago, people were like, okay, well, how long do you think it's going to happen? It's definitely here today. And so, you know, pretty excited that at least for our part, we've been shepherding at least one global bank like through that journey of evolution and revolution.
Good. So thank you very much for this discussion as well. I have here one or two questions I would like to ask you. So the first one is, how do you see the legacy financial institutions adapting to the new digital assets revolution or evolution? And how long do you think they can still ignore the massive changes happening right now? I would address that to Christine first, and then please, Diogo and Ellen, if you could comment on that.
Yeah, so let me just start by, and adding on to my last statement, let me start by saying that definitely it's not being ignored. Like I said, at the most senior levels, there is a lot of attention to it, and there is a lot of focus on, you know, how we position around this. I mean, how we position at JP Morgan specifically is building technology, and we have been building for the past few years. But as it relates to the public crypto space, as Diogo said, there's like a certain domain expertise that needs to be developed. There's a certain operational security that needs to be, you know, sort of like learned over time that Diogo and his team and Alan and his team have developed over the past decade. That's not something that we're going to walk into like the next day and be like, okay, now we're handling billions of dollars of crypto. Like, good luck. Like, hope we don't like send the private keys like to someone else by accident, right? So, you know, I think that from a positioning perspective, and you've seen this in sort of the mainstream announcement of some of the other market banks that are explicitly interacting with, I guess, what they're calling physical Bitcoin, which kind of is like a weird terminology to me. They're working with partners. They're working with partners who are experts in the space, and, you know, kind of wading in with people who, with banks and institutions that are trusted, that have built up a reputation, expertise in this domain.
Thank you. Diogo?
Yeah, I'll jump in and say that there's a saying in the cryptography world that effectively says, do not roll your own crypto. What that effectively means is you do not actually create your own cryptographic principles, because that is a terrible idea. You're going to get it wrong. I like to, tongue-in-cheek, use the fact that there's a little bit of a conflict between crypto meaning cryptography or crypto meaning crypto assets to say you should not roll your own crypto, in the sense that these traditional institutions, and many of them have tried and failed and come back to actually speak to Anchorage and other institutions like us to make sure that they're actually doing something that is up to snuff. Let me just take this opportunity to say every single one of these institutions is talking to us or to other market players. There are exactly 0 of them that do not have a crypto strategy, and there's very likely, less than 5% that I haven't personally talked to about this topic and engaged with. And so the reality is that they are not ignoring it. And in 2017, when it was this run-up that was primarily retail-led, they were coming to us and asking, what should we do in crypto? In 2020 and 2021, they're coming to us saying, this is what I want to do in crypto. And that is just a massive change in terms of behavior, in terms of attitude. They have concrete plans. There's multiple buyers inside of these large traditional finance, and they know exactly what they want, and different people want different things. And so they're actually looking for solutions to real problems and to real opportunities that they see. It's no longer some innovation blockchain group that, it's running on its own and is going to come up with a report in 3 years. It is no longer that. It is very clear that they have specific business needs, and they see money and opportunity on the other side. And when you see money and opportunity on the other side, these banks move very fast.
Thank you for that, Diogo. And before we ask you to join the networking room, I would give Alan the last word to this question.
Thanks, Nicolo. Just to add on to what Diogo just said, what we're seeing is a lot of banks coming in, and one of the places they are starting, quite frankly, is looking for a custodian, right? So Anchorage is right there in the sweet spot because a lot of larger financial institutions who are already custodying assets for in other asset classes on behalf of their customers, they're now saying, now we want to enable Bitcoin custody, right? For instance, and so Anchorage is right in the sweet spot, and to tie that to our strategy, several years ago we looked at this and said, we are not in the business of building a custody solution, right? We're in the business of solving problems for our customers. So who can we partner with so that we can provide a safe and secure way for our customers to store their digital assets so that we can then lend against it. And again, we reached out to Diogo at Anchorage. And as I mentioned earlier, we now have close to a half a dozen partners, but I'm not going to give them any airtime on this call because Diogo is sharing the screen with me. So it's great to be in a position to be working with great partners such as Anchorage. And I'll just turn it back over to you, Nicolo.
Good. So sorry, we had here some technical difficulties again. Thank you very much once again for the discussion.